Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, I got another news update for you guys, so let's not waste any time and get right into it. Alright, US productivity falls to an all-time low from Peter Schiff here. US productivity fell 4.6% in Q2, following a 7.4% fall in Q1. Year-over-year productivity fell 2.5%, the largest drop since the series started in 1948. With falling productivity, real wages must fall and consumer prices must rise. Government-created inflation is making both problems worse, and yeah, if productivity is falling, that's of course not good at all, right? If you're less productive, then of course you're not going to be getting as high of wages, and so when you compare that to inflation, well, that means real wages will fall and consumer prices will of course rise if you're being less productive, because then of course you're bringing less supply, and therefore supply and demand, prices go up. Alright, CPI falls off the highs. I'm just going to read through it really quickly here before I make any of my points, because it's easier just to read through it all. US July CPI year over year 8.5%, expected 8.7%, June 9.1%, US July CPI month over month 0.0%, expected 0.2%, June 1.3%, US July core CPI year over year 5.9%, expected 6.1%, June 5.9%. US July core CPI month over month 0.3%, expected 0.5%, June 0.7%. I believe that's all of them. I hope I didn't miss one because I just read through them all very quickly. Alright, once again here now. PPI falls off the highs. US July PPI year over year 9.8%, expected 10.4%, June 11.3%, US July PPI month over month negative 0.5%, expected 0.2%, June 1.1%, US July core PPI year over year 7.6%, expected 7.7%, June 8.2%, US July core PPI month over month 0.2%, expected 0.4%, June 0.4%. Alright, we got through it all. Now, let's get to what I want to talk about. Alright, so you see this chart right above me here. I'll get to that in just a second. But the main point I want to make here is that for all of these inflation figures, well, core CPI is higher relative to last month compared to standard. Right, we can see here when we look at month over month PPI versus core PPI, we can see that it was down 0.5%, where core was up 0.2%. And we see the same thing here with CPI. We see core CPI up 0.3%, whereas regular CPI was completely flat. Now, you might be wondering, why exactly is this? Well, it points to much of the drop having been in things like gas prices, as discussed when we saw the last print last month. But this shows that instead, stickier inflation factors like wage and housing inflation aren't leveling off and are continuing to increase, meaning the Fed is still not going to pivot despite this slight downtick. Plus, 8.5% is still obscenely high, with real inflation being even higher because, of course, CPI is fake, so there is absolutely no Fed pivot coming anytime soon, at least when we look at these numbers. And so, I would ask you, comment down below what you think. Was June the inflation peak, or will we see new highs? I want to point to this chart right here, that's why I have it. So, this is the CPI and core CPI going back into the 1940s here. Well, when we look at the current situation, a lot of the commodities have been selling off a whole lot because of recession fears, but the supply and demand factors are still not fixed, especially in things like oil. And so it's totally possible what we're seeing here is the 1970s. And so right, we look here, we had inflation ramp up like crazy, and then a recession killed off inflation. Could we be seeing the same thing here? Well, that is totally possible, because then that would point to us decline, go to a new inflation high, decline, go to a new inflation high, just because we have recessions. And so, of course, when you have that recession, supply and demand still isn't fixed, so of course then inflation shoots back up again. That's why you saw stagflation through the 70s. We could totally see the same thing here in the 2020s. But of course, that is projecting way out. I just wanted to note that comparison that, hey, maybe June wasn't peak inflation. A lot of people were kind of saying that last month, and I covered that idea in last month. In fact, I believe that was the title of the last CPI video, was peak inflation, because so many people were talking about it. But once again, chart like this, maybe that isn't the case, but of course, we'll just have to keep watching it. Alright, so bull trap in stocks continues. I'm sure you guys have seen the bear market rally. It's been going on for a few months now, if you've been, still looking at your portfolios. Well, getting closer to max stupid from Paulo Macker here. So the idea just that we have to get back to that max stupid point that we were seeing with like crazy NFTs and monkey JPEGs and stuff like that for the bull trap to end, right? Because you had the whole point of a bull trap is everyone gets bullish right before everyone gets killed again. And so we can see here, it looks like the retail tech basket, so FANG AMT plus AMD plus NVIDIA is more popular than ever. So we see that retail tech basket has shot up like crazy. This goes back to January 2020. This is retail investor net buys in billions of dollars, 21-day rolling sum. So we can see EVs going way up. and then we can see the retail tech basket going way up, and we've even seen a little bit of a recovery happen here in meme stocks, clean energy stocks, EV stocks, all those sort of things. Once again, from Zero Hedge here, the Prime book has seen short covers for 4 straight weeks in 17 of the last 20 sessions, and this week saw the largest dollar term covers since December 2021. In cumulative dollar terms, the short covers of the past month were among the largest over the past decade. So once again, right, a bull trap, bear market rally, that's to squeeze out the shorts before, and tricking everyone, pulling them all back in before we get killed off again. Look at any bear market over the past since ever, and that's how it's always been. And that's likely all we're seeing here. Though I could also be totally wrong, and this is totally a brand new bull market despite everything in macroeconomics. Perhaps that just all gets completely ignored and we go to a new high. Who knows? I personally am just being wary right now. Alright, Xi Jinping expected to visit Saudi Arabia. This is absolutely huge. I don't understand why FinTwit is not all over this. First overseas trip in 3 years to Saudi. What is he preparing for? Chinese President Xi Jinping expected to visit Saudi Arabia next week. So I don't really have a ton of commentary to provide to this, but I think it is absolutely worth watching what comes out of this meeting, because Saudi Arabia, of course, massive oil producer. China, of course, there's been more tensions building with Taiwan recently, and of course, in turn with the US as well. So I think definitely watch what happens here. That's all I've got for today. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.